Hey guys, Mike here with Vant Trading. Just wanted to do a quick intraday update on the market. Market's pulling back pretty good here. We did a video this morning talking about, how we're, in this deeper pullback, how we really changed thesis as far as where we were. And today's trading, if you found today's trading kind of difficult, now look, don't get me wrong, this has been a difficult tape. Okay, to trade in the last 3 days. And, as a professional trader, to be a profitably consistent trader, what you want to do is be able to understand relationships in the market. You also want to be able to understand when market character has changed. Okay. And so, if you found though the trading today a little bit difficult, then this video is for you. I kind of want to go over the action today. And really, it's been one of our best trading days in a long time. And, so we kind of want to go over some of those setups and go over what we are looking at today. Okay, guys, what I want to get into, first off, the market gave you a really good option, a really good opportunity to dip buy this morning. I'm going to share a screen right in here. You can see the SPY, this morning provided some really good opportunities. We talked about, really, look, guys, you wanted to follow the low, okay, of the pre-market. We were looking at the low of the pre-market, right in here. And we are looking at this really important level, this 378 level on the daily chart. So, if you look in here, we are looking for either a bounce off here or a continued failed move. And pretty much what we got this morning was that bounce, okay? And, we captured that bounce. It would have been able to give you a nice little write-off. You actually got a really good bounce out of a lot of other stocks, and I'll go into that in a second. But, the key is, and we talked about this yesterday, we talked about it in other videos. See, 3 days ago, we actually had the worst trading day we had in a while. And, we talked about it. To be a professional trader, what you want to do is you got to be able to just capture the market and know when market structure has changed. And we talked about it on the daily chart here. We thought that this little dip in here was going to follow the same playbook that we saw earlier at the end of January. And it really for a while was following that pattern, but yesterday completely changed character. Instead of getting a drive out of here to all-time highs, we saw a drop down, which should have been your signal yesterday that, hey, market character has changed and this is going to be a little bit different trade. And as you can see, we have now broken the 50-day moving average today on the SPY, and we've broken the the trend line that's really been upswing since the Corona low. So all two pretty good major violations here on the SPY, which basically shows you a weak pattern here. So what I want you to do is, look, there is plenty of opportunity this morning, but we talked about change of character. And that change of character is a sniper market, okay? Before, 2 weeks ago, what worked was buying the dips, and then, buying the dips and then selling into the rips. Well, here, this is a straight sell the rip market, man. When the market's going up, they're selling into it, and market character has changed. So, sniper trades only, not a good time to be putting on long-term positions. You're not looking to catch a falling knife, which is what this is. And again, we're live right now, 2:22 Eastern time, with market action going on. Some of the stocks that you could have bought into, it was, and again, this was a pure oversold bounce this morning is what we saw. Facebook, nice little drive off the opening print from 256 to 266. And it was pretty much all the FANG games really was running. We bought PLTR, Plantier, on a nice little dip, which, took us up nicely. We were into JMIA with a nice little dip. You had Walmart with another little, another good dip buy, that took us up. But as you can see, in all these cases, those dip buys did not work. They kind of stayed off topic. They kind of went back down, made new lows. So the key is, guys, when you're looking at the market, it's sniper trades. You got to know what kind of market you're in, and you got to know what kind of relationships you have. And so we identified today at 12 o'clock that, Fed Chairman Powell was going to go speak today at a conference. And the key was This was obviously going to have a really big effect on the market today. So the market had been weak. Part of the thesis of the market going up is cheap money, liquidity, and really the Fed, backing this market. So they really wanted to hear what Fed Chairman Powell was going to say. But I noticed on Twitter, there's a lot of people that were looking at the wrong thing. They didn't know what to look at and what the Fed, what they were really looking for at a Chairman Powell. And so, I saw a lot of tweets saying, well, he's saying that he's not going to raise rates. He's going to let it go for a while until he sees improvement. Yeah, but guys, the market could care less about that right now. That's out the window. Okay, you got to understand your relationships. It's all about the rise in the yield curve. It's all about the rise into long-term rates. And we told everybody, and if you've been following us for a while, you already knew how to play this market. But you didn't have to watch Fed Powell's speech. You didn't have to watch the question and answer session. All you had to do was put the 10-year yield, TNX, up on your screen. And that's, again, that's been our leader, our gauge. Now, will that be the leader for the rest of the trading time? No, markets are constantly changing character. They're constantly changing relationships, right? Before we were looking at Apple and Tesla was really our FOMO gauge, right? And then, just recently we were looking at IWM. So, it's constantly changing. You're going to look at oil sometimes. A lot of traders who have traded a long time looked at the yen. Okay, so there's a lot of different things relating to relationships in the market, and it's all to give you better odds. It's not guaranteeing anything, but it's put the odds in your favor. And today it worked like a charm, and that's why we had one of the best trading days we've had. And I kind of want to go into that right now. So let me share that chart with you. First off, looking at the yield curve, okay? What is the yield curve? Very simply, the yield curve is nothing more than the spread between the long-term rates and the short-term rates. Typically, you look at a 10-year, 2-year spread, okay? And so here you can kind of see in this chart, the current yield curve, you can see the long-term dated rates are up here and the short-term dated rates are down here. So this is a normal inverted yield curve, but what you're kind of looking at is the steepness. So look at a year ago, even a year ago, where we were. Right before the coronavirus, rates are actually higher now than they were back then. So, and that's something that's important to take into consideration. And we're getting close to where rates were just 2 years ago. So, this is a good example of what, the yield curve is about. And this is how you want a yield curve to look, right in here in 2019. Nice little slope. But you can see how steep this slope is when they talk about the yield curve steepening, what they're talking about is long-term rates are going up, a lot quicker than we're seeing on the outdated end of the curve than we're seeing on the short end of the curve. On the short end, we're basically seeing almost 0% in rates. But as you get, to the 10-year and then to the 20 and 30, you can see where these rates really are sitting and how they've been rising, and they're pretty steep at this point. Now, with that understood, what the market was looking for today is not whether Powell's going to raise rates, okay? Yeah, that's always in the market's mind. But what they were looking for is, and it's something that they mentioned back in September, was that the Fed was going to look into yield curve control. Now, what is yield curve control? Well, typically when the Fed's talking about providing stimulus, we're talking about the short end of the curve. And that's when they're dropping the Fed funds rate. It's a short-term mechanism and keeps short-term rates low, which keeps the liquidity low. And there's a lot of liquidity sloshing around in this system. But, what happens is the long end is a little bit harder to control because it's based off of really think about it. It's more of a long term. So you're thinking about what's the long-term health of the economy. And so, with the vaccine out, with the, manufacturing running hot, with consumers doing really well, it's looking like we're going to have, incredible economic growth later this year. And we are seeing that with the rise of these long-term rates. And also we're talking about inflation and stuff like that, but I don't want to get too much into that. So what they were looking for is what's the Fed has done in the past. They did it in 2011, which is called Operation Twist. And what Operation Twist is basically, instead of, buying these these treasuries, these short-term T-bills, right? Because think about it, it's supply and demand, and bonds have an inverse relationship to the rates. So if you're, if you're buying a lot of bonds, right? You're buying a lot of bonds, there's a lot of demand, and that causes the price of those bonds to go up. But what it also does is causes those rates to drop. Okay. So, typically when they're, trying to do QE and providing liquidity, they're working on this end of the curve. This is where the Fed is best suited and where it's always suited. But Operation Twist is really twisting that around to try to control the long-term part of the curve. And so what they can do is, and what they've done in the past, is they would start selling their positions in the short-term bonds and T-bills that they have, and then using those funds to buy long-dated bonds, buying the 10-year, which of course would then cause the 10-year price to go up, TLT to go up, but then would also have the effect of bringing rates down because it has that inverse relationship. So, that's what they were looking for today. Nothing else. They don't care about anything else. And it's not that rates can't go up and the market can go up. It's really what the market's concerned about is the velocity that rates have gone up, how quickly they've gone up. And that's become a concern for market participants. So rating here, what we got was a tweet from Powell. And let me kind of, reshare my screen to a different screen here so you can see this. What we got was a tweet from Powell right about 12:10, I think it hit, 12:15, basically saying that he was not going, they are not looking at going after specific sections of the curve, meaning that they're not looking at Operation Twist. So the market got the exact opposite. So as you can see, we talked about it, the market, okay, and I actually have Walmart up there. Let me kind of get that off for you guys and put the SPY and show you how that worked. The market, okay, I want to show you a couple things right here. Okay, at 12:18, the market kind of dropped down when Powell started talking, and let's kind of zoom in here a little bit more for you so you can see in here. The market started dropping, and then it recovered with this little pop here. And right here, this is rates. So going into the Powell speech, rates were kind of hanging at, 1.477. But going into the speech, we started seeing rates rise pretty dramatically, pretty fast. Now, last time we had rates rise was when about a week ago, when they had liquidity issues in one of their auctions and, caused rates to spike to 1.61. And that caused, the market to kind of, careen down. Well, here, the way we traded this was really simple. We got out of all our positions once Powell started speaking because, if we can't control our risk, we already made our profits from the dip buys, sniper like we talked about. And then here, once we saw this little dip, right, I kind of thought we missed it. But once we saw this little pop up and we saw rates just, surging up, that was your cue. That was the clue for you to get in. And we just piled in puts, market puts. And, this was huge return. And every single pop we got, we shorted. Every single pop we got, we shorted, okay? And now what we took it all the way down to 372 on the SPY. And, the interesting thing is that, the market's kind of hung out. It's kind of recovering a little bit. What you have is you have a lot of people at 2 o'clock that had margin calls that have already been sold out. So you got some of that pressure taken out of the market. But you also have still, you have a lot of these people that were short that need to cover, right? And the only way they can cover is by buying it back, which causes this upward pressure in here. But again, rates starting to rise again. So, we're probably going to re-shorten here. So be careful. This was the easy way to play this trade, right? We usually don't like to play, headline-driven stocks, and playing the market that way. But you know what? This gave us just such a great risk to reward ratio that, again, you bought the dip in a lot of these stocks, and then we sold out right before Powell came in, and then we also sold in here, some puts, and incredible returns. So if you weren't able to follow this or don't understand this relationship, look, we're not saying that this relationship, it's not going to last forever, right? At some point the market will switch and we'll look at a different relationship to help us get a better odds. But right now there is no better play than having these long-term rates up here, having the TNX. All you need is really these two charts just stand right here. Plus, you also had the VIX, VIX popping up to 30 today, so, the key is to be a consistently profitable trader, guys, you do not want to, you don't want to try to catch a falling knife. Okay. Don't worry about what you could have missed. Yes, stocks are on sale right now, but guess what? They can go on sale a lot longer than you can stay solvent. Okay. What you want to see is, keep your ego out of it. You'll know when stocks start basing, but right now this market is broken. There's a lot of charts broken. So don't try to catch that falling knife. Risk management is number one. Only take A plus setups, which we got 2 of them today. And now hopefully you have a better idea for how you too can play this market, going forward. Now, a couple other things, couple closing notes that I want to say, and let's look at a couple levels for you guys going forward, for playing this. It's great, Mike, I made that play or I didn't make that play. How do I trade this going forward? Well, again, you want to keep TNX up on your screen. Okay. It's going to be, without a doubt, TNX you want to have up on your screen. You want to have also the VIX up, the VIX really needs to come down to 22, guys. I mean, it's really elevated right now, which means, it could be an issue going forward. And the difference is, before today, we really saw, some deep, it was really an orderly pullback. Okay. But today we actually saw the ADD line go to the extreme level of about 2,200 negative. We saw the extreme tick prints, which we hadn't seen that type of action in here. So now what happens is, we have a lot of bag holders just from what the action that happened today, because it was a pretty quick turnaround. So now that's going to put more pressure on the market going up, but we are extremely oversold. And, we expect some kind of bounce at some point. Now, what I'd be targeting in here is this, this low from this pullback here back in the end of January, which kind of coincides right around this level, this 370 level in here. But we break that, then it could be open air right down to 360. And we could be in for some problems. The key is what you want to do is trade your levels, sniper trades only. It's not a time, being below the 9 and the 21 is not a time to be initiating long-term trades. Again, it all depends on your horizon. But stocks can go a lot farther than here. Now, as a fund, we're bullish the market going forward. We're very bullish from the fact we got stimulus, we got some things, but we talked about it 3 months ago, how good news is going to start becoming bad news. It just happened a little bit quicker than we thought. So if we look at the hourly chart, let's look at the hourly chart on the SPY, and what kind of levels are we looking at going forward? And what we'd like to see is those rates. You can see we're oversold level 1 rate in here, pretty good. That's why we got this little bounce. And what I want to see is us to reclaim this 378.55. We got to get back up here, and then get back above this 381. So just know your levels right now. When you get a low, it's kind of how we played this today. You just need to know, when you got a low in the pre-market today, and it holds well, and then they bring it back up, and it just by coincidence right in here is the 50. So they broke the 50, held this low, brought it right back up. That's what you want to look for. That's where you can go with some sniper trades. But right now we're a broken market. So be careful going forward. Don't trust it. Keep rates up until the market looks for a different relationship. Safe trading. I hope you guys were able to take advantage of the trading today, because we know this is a tough tape, and it's going to be a little bit tougher going forward.